Welcome to Share Talk, the only podcast where investors come first.
Hello and welcome to Share Talk. Today I'm joined by Susannah Streeter, who's Senior Investment and Markets Analyst at Hargreaves Lansdown. Hi today, Susannah.
I'm very well. Busy day.
How has the market reacted to Rishi Sunak's manoeuvres today?
As Rishi really outlined once again how the damage caused by the coronavirus has been acute, he put more bandages and splints really on those parts of the economy that still need help. And as a result, we've seen a boost in hospitality, house builders, retail and airlines in particular. But also he outlined that longer term, the rehabilitation of the economy is forecast to be swifter. That's come from the Office of Budget Responsibility, which is independent. And that did initially buoy the pound, although it has lost some steam since. But what was really interesting is what he introduced around trying to boost the UK's productivity, what he called the super deduction measure. Now, this enables companies to reduce their tax bill by 130% of the cost of the investment. And that is really aimed at boosting investment to help turn the economy around. And interestingly, that saw BT's share price rise quite significantly because BT is expected to be one of the big beneficiaries because it's currently plowing millions into replacing the broadband infrastructure, line fibre optic cables, and it's hoped that it can offset some of these costs because of this new super deduction measure.
So this is actually a great quite a novel new approach here. So it's not sort of saving taxes, it's not actually putting money into people's pockets.
Yes, and I think the feeling is that a lot of corporates do have money. They've saved a certain amount of money because of uncertain times, but they've been hesitant to spend, to invest for the future, to create jobs and make sure that actually the UK's productivity is boosted further down the line. And so this is aimed at trying to help that reinvestment and ensure that companies are using that money wisely. So interesting to see how that will play out.
So it stops people hoarding cash, which is what they tend to do in they tended to do after the QE.
Tend to do in a crisis. Yeah.
So that is great. Were there any losers that you've seen? Any sort of negatives that you've seen on the market at all?
Not too many negatives, in fact. I mean, you always are going to get gains and losers on any one day. Ocado, for example, is a little bit off today. Expectations that there will be a brisker recovery, which perhaps means that stay-at-home stocks won't be quite so buoyant in the future. Interestingly, Renishaw, which is this precision engineering company, which announced it was going up for sale yesterday and saw an 18% share rise. That's fallen back quite significantly today. But what has been really interesting is that those stocks that really suffered during the coronavirus crisis, for example, the likes of Whitbread, IAG, British Airways owner, they've staged good recoveries today, up 5%, anyway, around 5%, because it's thought that these, some of them have been real beneficiaries of the furlough scheme, which of course is being extended, but also this VAT cut to 5% will also be extended, and that is also going to help the hospitality industry as well. So certainly, I think hospitality and pub chains in particular, like JD Wetherspoons, Mitchells and Butlers, they've seen quite buoyant rises today. So I think overall, there has been quite a positive reaction to the budget.
Well, sounds good. I'm sure we'll all be off to the pub as soon as we can be. But in the meantime, Susannah Streeter, Senior Investment and Markets Analyst at Hargreaves Lansdown, thank you very much indeed.
Thank you.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.